966.
Saudi Arabia's venture capital space is experiencing rapid growth, and in the first half of 2022 has already surpassed its total investment amount for last year with over $500 million in investments in the kingdom. Joining us today on the 966 is Eyad Albayouk, General Manager at Flat6Labs Saudi Arabia, an early stage and seed venture capital firm in the kingdom, which just 2 months ago announced an agreement with Saudi Venture Capital for a new fund to invest $40 million into early stage and promising Saudi startups. Eyad previously worked with Sandoval Investments, Arzan Venture Capital, and other organizations before joining Flat6Labs. Eyad, thank you so much for joining us on the 966 and welcome.
Hey, no, well, thank you for having me, Lucian and Richard, and it's an absolute pleasure to be here and really excited to have this chat today.
Well, Eyad, when we first spoke, I don't know, a month and a half ago or maybe more, I was just delighted because, Flat6Labs has quite the pedigree in the region, and you're there as a general manager of the KSA office or branch. But now that we come to the episode, it couldn't be better timing because, as Lucian referenced, Magnitt, along with just did a venture capital report, which they did in collaboration with Saudi Venture Capital, which highlighted just a stunning first half for Saudi Arabia.
Absolutely. And it's been on that trajectory for the past 4 years, I'd say. So we really started to see some of these changes take hold in 2018. Of course, it was all really driven by government policy. So definitely a top-down approach there. And I think it was something that was overdue for quite some time. Of course, it's no surprise that we have a very centralized, or historically at least, we had a very centralized economy. And I think with some of the reforms that were taking place to increase the participation of the private sector and basically enable capital to go to private enterprise and essentially create more jobs for the Saudi population, which I would label as the end game out of all of this. We started seeing some of these mandates essentially go into effect around 2018 with the launch of the Saudi Venture Capital Company. Again, that's a government-owned enterprise that operates under the umbrella of the Ministry of Commerce, interestingly enough, by way of a private sector enabler called the Small Medium Enterprise Authority. Of course, locally we refer to it in its Arabic name, Munshaat, essentially a different translation for entities or enterprises. And then we had another similar organization set up by the Public Investment Fund that currently has the brand name of Jeddah Fund of Funds. Much like Saudi Venture Capital Company, they also come in as a limited partner in private closed-ended fund vehicles, essentially with a focus to speed up the growth and participation of the private sector vis-a-vis making more capital available for private enterprise. Of course, I think it was a lucky coincidence that all of these efforts essentially find their way towards venture capital funding as opposed to any other form of funding. But I think that really gels with the structural nature of the Saudi economy, at least in its current form today. It's brand new. Private enterprises are not at a level where they would be for a economy that's of similar size and stature. And I think it was just a natural evolution of that funding being available, making its way to newly built and high growth enterprises, as opposed to more established companies, which again, are not on par with most, I would say, emerging and developed economies of the same size and stature as Saudi Arabia.
Yeah, that's a really useful overview, and I think for me and our listeners, that gives some context. And we had sort of outlined a topic list that we wanted to go through, and as always, the first encounter, all our plans are out the window because that was so good. I want to go forward a little bit on SVC, the Saudi venture capital. This is, as you say, 2018 introduced assets under management about $1 billion. Since its inception, SVC has backed 30 funds, 5 angel investor groups, invested in 401 startups and SMEs. So it's the big fish in the pond. How do private venture capital groups sort of organize themselves around this? And I want to get to, Flat6Labs has a relationship with SVC. You're doing a really interesting initiative. I want to get to that. But again, in a broader context, just as you say, it's a top-down sort of environment. But increasingly, private investors are getting involved. And I would say one of the most interesting things, and you can contradict me on this, but I thought one of the most interesting things on that Magnitt report, and I do want to come back to that and go over some of the things, was that in the first half, a record number of 88 investors backed Saudi-based startups in H1 2022. Big part of that was that 58% of those active investors were based in Saudi Arabia.
Saudi Arabia, correct.
So I want to come back to that, but I'm really interested in your take on how these private sector fish revolve around this big fish, or these two big fishes, the Jeddah Fund of Funds and Saudi venture capital.
So I think it really comes down to another structural problem, if you will, and that we really don't have the institutional investor base that you would find in most developed economies. So I think when the plans were being laid out to increase capital funding and basically fund availability for the private sector, all the management consultants that were working on these mandates identified that alternative asset managers, private equity, venture capital, and other forms of these capital wallets essentially fueled a lot of the economic development when it comes to private sector and in a lot of benchmark economies that they were trying to compare them to. Now for us, we don't have the typical pension layout that you would see in the States, for instance, or you don't have as many pension operators, whether they be on the public side or on the private side, to provide that capital. Also, endowment funding and the way endowments are structured and so forth are quite different. So our endowments are a bit more conservative in nature, and they haven't really ventured outside of very safe investment vehicles, I'd say, at least historically. And then, of course, in addition to that, I think a good chunk of capital sits in family offices. So your typical merchant families that have been around for centuries, some of them predating the country's establishment in some cases. Those are actually another quite large source of funding. However, a lot of that capital was really focused inwards towards some of their more conventional group companies and operations that really got them to where they are today. So I think really these large semi-government enterprises, as we see in Jeddah, really came about to kind of show the rest of the private sector and other pools of capital that there is value to be unlocked at the earlier stages and within different, let's say, business models within the private sector, arguably much larger than a lot of the conventional plays that we've seen in the market by way of private government contractors, of course, on the construction side, and more trade businesses, which really dominated the private sector here.
Are you seeing some movement? Well, you mentioned pensions and endowments and family offices in particular, and as you say, they're very conservative, so they're not really looking at startups and even SMEs in many cases. Are you seeing some movement in that direction?
We absolutely are, and in fact, we're trying to finalize our basically funds backing by one of the larger family office groups here in Saudi Arabia as well. Of course, we're at the final stages there, so I can't really disclose much about the identity of that institution. But again, it's something that I personally wouldn't have dreamt about even a couple of years ago. So it's kind of nice to see that take into effect. And of course, the catalyst there, I'd say, was also COVID. So I think a lot of these institutions really saw their worlds crumbling down, especially with business models that are quite reliant on foot traffic and physical transactions. Of course, during COVID, a lot of these businesses had to shut down and essentially realized that they're quite behind when it comes to digitalization and essentially the digital economy. So that's definitely one area that we're seeing mobilize into the asset class and into digital investments, but also likewise, we're seeing more participation from corporates, publicly listed and otherwise. The larger corporates are definitely dipping their toe in the water more so than they have been in the past. Not as much, unfortunately, by way of your typical institutional investors that you would see in a more developed market. So pensions, I think, have a little time to kind of go before they start participating in the asset class. But then again, there it might be a bit structural in terms of the barriers to them participating. The way that we have our pension system designed here, we have one large, or at least historically, we have one large public pension system, and then we had another separate pension system vis-a-vis the General Organization for Social Insurance for the private sector, both government run. They were separate until about a year ago when both were merged under one roof. So what we ended up with is a very large social safety net for pensions that handles both the private sector and the government sector. Of course, when an entity becomes that large, there's only so much assets that they can invest in that would move the needle. Of course, putting small tickets to venture capital is a nice way to diversify away from how they have their asset allocation structure today. But is it really going to move the needle in terms of any unfunded, basically liabilities or pensions that they have to fund? Not necessarily. So I think that's where we have a little bit of way to go. Of course, there's a lot of talk about privatizing that space altogether, but I think it's still some ways away before we see that come to light.
That's interesting. I don't want to spend too much time on that because I want to get to some Flat6Lab things. But just to clarify, so GOSI, that's how I understand it, the social insurance oversight it's now public and private. It's
correct. So actually, it was two organizations. So we had the Public Pension Authority, which was mandated with taking care of public employee pensions and completely separately run. And then we have GOSI, which handles the private sector's pensions. Again, both government run and kind of play a regulatory and, of course, the typical function of any pension manager that you would see elsewhere in the world. About a year ago, there was a decision to essentially merge the two organizations together. That merge has been completed now, and I think it's in a stage where there's a revisitation of the asset allocation and essentially trimming of the fat between any redundancies that were in place between the two entities prior to their merging.
And as you say, I would anticipate their investment portfolio and approach would not change much, would remain pretty conservative.
Absolutely.
Let's talk about Flat6Labs. As I said, quite a pedigree, I guess, begun initially in Egypt, now in seven countries. Is that right?
Correct. Yep.
In the region you're in, you have operations in Lebanon, Tunisia, Bahrain, Jordan, UAE, Saudi Arabia, obviously with Egypt. By the way, I'm really interested in the origins of Flat6, the name, because I know Flat6, that's this type of engine. But I don't know how it plays here. You may not know, but I think it's
always a topic of conversation because, like you said, I also thought that it was a reference to the Flat6 engine for vehicles, but then it turned out that it was the British or English meaning of the word flat, i.e. apartment number 6. So that was really their first look. It's actually still part of the larger location of Flat6Labs. So that building is entirely occupied by Flat6Labs, and Flat 6 or apartment number 6 still exists today. In fact, it's where the Cairo-based accelerator program operates out of in this current day and time.
That's even a better story than an engine. That's nice. Yeah. So where does typically, so I mean, if you look at venture capital funding, you know, goes from pre-seed funding to seed funding to series funding all the way to IPO, where typically does Flat 6 in this ecosystem, where does it make hay? I mean, where does it like to position itself?
So as early as possible, we'd always like to say. So of course, there's always some variations between our different locations, and maybe I'll get to that in a little bit down the line. But essentially, we're early stage investors, so we don't shy away from pre-revenue operations, pre-MVP operations. Really, as the saying goes, two guys or two people and their dog out of a garage is exactly where we would like to come in. And it really, exactly, yeah, absolutely. And it really came about, I think, from the two founders. So Ahmed Alfi and Hani Sambati essentially started off with another vehicle called Sawari Ventures. So that was envisioned to start investing in Series A plus type ventures. But I think when they really launched that operation, they realized that it was somewhat of a slim picking scenario, given that back then, we're talking circa 2009, 2010, that ecosystem was still not developed, even in Egypt, which has always been kind of a hub for entrepreneurial activity in the region. And because of that, Flat6Labs was born, essentially a accelerator type model that helps create more of these entities so that Sawari would be more better positioned essentially in their pipeline, so that they can observe and invest in these companies as early as possible, and then the ones that kind of survive that journey end up getting the larger ticket of capital from Sawari Ventures.
And you said that it might differ among the offices, you know, depending on the market needs. So the UAE may be different from Jordan.
Absolutely. And I think the biggest factor there, and it really goes back to funding sources at our LP base, is that we do often have different mandates depending on which country office we're operating out of. So for instance, in North Africa, of course, a large chunk of the capital and LP commitments comes from DFIs, which carry specific developmental and social entrepreneurial mandates, and oftentimes are focused on specific emerging economies rather than others. Of course, in the Gulf, you have more participation from the likes of SVC and Jeddah that have their own local mandates that dictate what type of essentially is being invested in. Of course, the shared mandate across the board is local investments for local entrepreneurs. So essentially, to accommodate this, we ended up with a structure that is also localized for the local market to not only fulfill the mandates of our LPs and their socio-developmental requirements, but also to bypass some of the regulatory and statutory requirements in each one of these locations. I think it's no secret that MENA, even though most people would like to paint it as one big region, essentially is made up of much smaller markets that are quite different in terms of the requirements and their statutory, basically, structures.
Let's talk about your relationship with Saudi Venture Capital, and really interesting. You, I guess, launched in April. Saudi venture capital partnered with Flat6Labs to launch the startup seed fund. Correct, and also working with your Riyadh seed program, and this is a $40 million proposition, looking to empower more than 60 startups over the next 3 years. Can you talk about it? It's quite exciting, and you know, that's the group you want to partner with.
100%. And so essentially, SVC is our first LP in that fund, and until very recently was the largest LP, with the exception of this private sector player that we were mentioning a bit earlier. Of course, none of this would have been possible without them. I think they've been, of course, an instrumental player for the sector in general, but also I think they really do have their finger on the pulse as to what the ecosystem needs and what it doesn't need. So I think with Flat6Labs, when we were kind of doing the mapping of the country and trying to figure out what pockets are still not served and where there is some gap in the market, really two areas jumped at us. It was later stage funding, so things beyond at Series B and beyond, and then obviously at the much earlier stages when we talk about ideation and pre-MVP and pre-revenue type operations, what most people would call pre-seed. Of course, with Flat6Labs, the latter makes more sense given our operating history, and that's really when we approached them to try and set up a dedicated vehicle for the Saudi market. And of course, we saw eye to eye immediately, since they also identified that as an area that's underserved by the current operating consortium of funds or group of funds that are available in the market. And that's really how that developed.
So, and that's just begun in April, just launched. How is it coming?
So it's coming along nicely. We're still in the final phases of our fund closing process. As you can imagine, legal work takes a little bit of time. I enjoy, of course, draft legal documentation ping pong just as much as any other individual, but you know, it's part of the job and it's always fun. But yeah, we're basically at this part of the process at this point.
You, Flat6 also came out in April with survey results. I guess you did a survey on key insights about the startup ecosystem in KSA. With some interesting results. Can you discuss that a little bit? Because this is real insight.
Absolutely. And it was really just the final verification, because you know, things have been moving quite fast, as we mentioned at the beginning of the talk, with almost 600 million in investments for this first half alone. So of course, with the setup for these vehicles typically taking a little bit of time, we really wanted to make sure that the market hasn't really moved away from us, so to speak. And of course, the survey, the headline there was that, the headline result was that it didn't, despite all of the progress that's happening in the market. There's still an area that's quite underserved, especially when we think about it in more basically macro level data perspective. So we have a very young population, and it's still pretty much part of our demographic makeup for the current time period. A lot of these folks are going to come to market either looking for jobs or looking for a way to make a living. And more often than not, starting their own venture is becoming more interesting compared to getting a salary job with a government entity or institution. And likewise, it's definitely more interesting than going for also a private sector job or position. Of course, the funding gap was quite clear. So most individuals still rely heavily on self-funding and basically money that comes from family and friends, as opposed to anything by way of outside investors, whether it be angels or more institutionalized operations like ourselves. And of course, the big headline also was the amount of funding available. So I think one of the big disparities between us and some of our neighboring markets, especially when we compare ourselves to our home market in Egypt, is that the cost of doing business is quite more elevated here in Saudi compared to some of the other neighboring markets. But then again, it's very different economic factors at play. So GDP per capita is much larger, the average salary is much higher, and likewise, discretionary spending also is much higher. So these are different factors that kind of also show that there is a big opportunity set at play despite the higher cost of operating a business.
Well, one of the interesting items in that report that Flat6 did was that apparently, according to the survey, 1/3 of startups were founded within the past year.
Yeah.
Which is stunning. And I want to circle back to something you said about youth looking at different opportunities, because for the longest time, basically the goal of a Saudi citizen, either a government job or the gold standard, maybe get Saudi Aramco, but that's changed. There are many
quite a bit.
Yeah, many more opportunities and many more options, and certainly young Saudis are broadening their target. But it sounds like, as you say, a significant percentage of them are saying, "I'm going to go into business for myself."
100%, 100%, and I think it really comes down to I don't think it's a huge mismatch, but there is a little bit of a mismatch between the skill sets that a lot of individuals or young folks get after the university and between the jobs that are available and more conventional, with more conventional employers, right? So we do have quite a bit of folks graduating from STEM backgrounds, but then again, that really hasn't been a big part of the private sector, at least in the past. Likewise, we do have a lot of people graduating with business degrees. Of course, their finance has been or at least I would say corporate finance and banking specifically has been a big off-taker there, but there's only so many jobs that you can create within that subsegment compared to the inflow of graduates coming into the market. So I think it's quite natural for people to look at the headlines and see some of these rounds, like for instance with Foodix, large round that just happened a few months ago and was part of the numbers coming in for this first half, and thinking, you know what, I think I can do something similar, and I would like to take a crack at it and see how things play out, especially with funding being available, and of course some of the other reforms coming into the statutory environment and the legal environment into the market. I think a lot of people are less hesitant to kind of take the risk and essentially not go for their conventional job that once was the blueprint really for any Saudi graduate.
Let's take that Foodix reference and circle back to the Magnitt report. and in this H1 2022, the top funded sector, the sector that received the most investment was food and beverage, but that was really outsized because that $100 million plus Foodix IPO, right, investment rather. In terms of deals, the list was fintech, transport and logistics, e-commerce, enterprise software, and then food and beverage. Does that accurately reflect your reality? Is that what people are excited about?
It does. And for the longest time, it's been fintech, which has been globally a very hot sector, I would say, and then e-commerce, and both basically segments were competing for the top two spots. But I think one thing that's quite interesting about Saudi Arabia is how widely spread the food and beverage culture is, and just eating out culture or even delivery is a big part of basically our entertainment venues for the longest time, because that's all we had until we started seeing some of these reforms with more entertainment venues coming online. Mm-hmm. So that industry, I would say, has been more mature and more robust compared to other segments within the private economy, so to speak. So I think it's no surprise that basically a SaaS operator like Foodex was able to capitalize on that trend and essentially come to market with a product that really serves that large segment that has been a good chunk of our private sector for quite some time, by way of not many other entertainment sources being available. I think it's there to stay. Frankly speaking, I think it's got some legs, and it's going to basically be a good part of the story going forward. But yeah, it is quite interesting to see, I think, for an outside observer.
It is. It has been interesting to watch. It seems like every other startup is food delivery based or some other thing, because there's clearly a market for it. So let's move out a little bit on that Magnitt, because Magnitt report. In terms of numbers and deals and amounts of deals, UAE took the first half. They're in the lead. Saudi Arabia was second. It was notable, I guess, in terms of numbers of deal, that Saudi Arabia sort of leapfrogged Egypt in terms of numbers of deals. They're very close, 79 versus 78. And as you noted, Egypt has really been the main source. So the origins of so much of this investment, and I think have been a guidepost for a lot of people throughout the region. Is this something that will sustain, you think? You think Saudi Arabia is headed this way? It will probably be a little more active and continue to climb the charts, as it were?
I certainly hope so. And I think one thing that doesn't really get reflected in the numbers is how much collaboration there is between both countries, in terms of Saudi companies looking to Egypt as basically their second market to grow operations outside of Saudi, because again, it's a very sizable population, and it's not a small economy by any measure. And then vice versa, likewise, you have Egyptian companies essentially looking at Saudi Arabia as their first go-to location to expand beyond their borders. But also when it comes to operating considerations between the two countries, a lot of Saudi companies end up hiring a lot of their technical workforce outside of Egypt as well. Because again, there's a shared language, there's no shortage of technical capabilities, especially when it comes to computer science and basically programming. So a lot of Saudi companies end up hiring basically operations staff and development engineers in Cairo. Of course, again, with the round trip from Cairo to Saudi for Egyptian companies, of course, sales and business development is also a big function here for these companies that are looking to expand beyond Egypt and come into another neighboring market.
There was one that Magnitt report, by the way, I recommend to folks, and maybe Lucian, when we the video of this, maybe we can put up some slides. But it was really useful. As I said, we feel very fortunate in terms of the timing as we're talking with Eyad. One slide I thought was interesting was, it looked at VC funding by stage. And the range is 2018 to 2022. And the four stages it notes is early stage, Series A, Series B, and then late stage. And I thought it was interesting in the slide. So 2018, essentially 2018, 2019, 2020, 2021, early stage is all in the 80% of deals. The one thing, what has grown in 2022 was Series B, which has grown a little bit, but just sort of peaking out for the first time in 2022 is late stage, 2% late stage. Is that going to grow?
I certainly hope so, because again, that was kind of I don't want to call it Death Valley, but really that's what it was. You had companies that really did great stuff in terms of ramping up their operations, but then essentially hit a proverbial wall once they get beyond a certain stage, because they couldn't get access to funding that helps them go beyond those earlier stages or relatively early stages. So I think one entity that's also being more active in that segment is my ex-employer, Sinavel Investments. So of course, their name came up with the Foodix deal, but also they're quite active in trying to be kind of the bridge for these Saudi tech companies that get to a certain stage of growth and are kind of beyond the market fit stage and essentially being able to cement themselves as a sizable and growing business, and essentially need that funding to continue growing. So they've, I think, positioned themselves in a spot where they are that source of capital, and also by way of them being an LP historically and a lot of venture capital funds around the world, essentially being a pipeline generator for these essentially companies so that they can connect with international VC shops and investors abroad.
Let's so this was a tremendous first half. I think in terms of the global economy and that sort of things, probably we're seeing more headwinds this second half. Do you see the momentum of this venture capital ecosystem continuing? I mean, is it wholly contingent on the global economy and you know, oil revenues and that sort of thing, or does it have an impetus of its own to continue its expansion, and not necessarily at this pace, but on this trajectory?
So I think within the Saudi context, strictly, of course, we do have considerable tailwind by way of oil prices being where they are today. And of course, if that continues, then we'll be quite set for that trend to keep going. And I think even in a scenario where oil prices don't keep up their current levels, it's an existential task at this point, I would say, because we really at a junction where, you know, the old blueprint of relying on government spending and a centralized economy isn't really going to work over the long term. Of course, it's a great coincidence that oil prices happen to be where they are today, which would hopefully be more of a catalyst and more of a fuel for these trends to keep going the way they are going, at least within the Saudi context. But I think it'll be quite naive to assume that what's happening within the greater global economy won't have a little bit of a spillover into the sector and into our own economy. Of course, I think one thing that a lot of practitioners or a lot of shops have been hoping for is a correction in some of the deal terms that we're seeing. I think it's been no secret that over the past 12 to 24 months, prior to this market correction that we've seen, deal terms and valuations have really become quite elevated to a point where a lot of people might describe them as unsustainable over the long term. And I think a lot of people, at least on the investment side, of course, not so much on the entrepreneurial side of things, are hoping for that to spill over into the local market so that, you know, the market doesn't get ahead of itself in terms of valuations and terms. Are we seeing that happen today? Not necessarily, but I think generally speaking, it wouldn't be an accurate statement to say that both entrepreneurs and investors are becoming more conscious of the terms that deals are being underwritten.
The capital market situation and obviously the Tadawul did I think was one of the leading forces in the globe last year. But the no-mill market as well has been quite active, and it seems to have been a target and opportunity for a lot of companies. And is that how you're seeing it? Again, I don't anticipate it will repeat last year's performance, either the no-mill or the Tadawul, but it and in fact, I understand IPO activity is reduced, a little suppressed at the moment after a very heated run. But it's an exit that didn't really seem to exist, 5-10 years ago.
100%. And I think most investors really came into the asset class with the mindset that mergers and acquisitions, especially by way more international operators wanting to come to a market being the only viable way to exit. But again, what happened with Namu, especially with the Jazz IPO, again, Jazz, for those that might not be aware of it, is I would say the leading on-demand delivery platform for, of course, food and beverage and other Q-commerce type services. That was quite a successful exit vis-a-vis financial markets. There's a healthy pipeline of similar companies that are thinking of using that market in particular, or that marketplace in particular, or public market as a venue for their financial exit. It remains to be seen if it'll be as successful going forward as you rightfully said. But within the grand scheme of things, I think one thing that has always irked me about our public markets here in Saudi is that they're quite limited in the number of companies that were listed. So for the longest time, we had somewhere around 180 to 200, less than 200 companies essentially trading in that exchange. And that's quite a small size given the size of the economy. I think both the government and the exchange itself have been quite helpful in convincing family offices and basically larger enterprises to think about going public and what that would unlock for them in terms of access to not only public equity, but also other forms of capital and reducing the cost of financing their businesses. But also with Namu, I think it really gave an avenue for investors to essentially see the light at the end of the tunnel in terms of getting liquidity for their investments. And I think that's one of the main reasons why you see the majority of investors today being Saudi investors, because of course, a Saudi entity typically did have an easier time navigating the requirements of going public on one of these exchanges. So that's been quite interesting. And it's certainly something that I see continuing going forward, although as you correctly mentioned, with the uncertainty in terms of where the exchange is going to go and where the index is going to go over the short period of time, is triggering a wait and see approach with a lot of basically companies that were set on going public this year.
So I have to ask you, because I think it's a theme, Lucian can attest to this, that every bright person I meet, I sort of ask them about this. It's not your bailiwick per se, because it's a sovereign wealth fund, but what is PIF? I find it fascinating. The mandate, the thing, how it's evolved. This was sort of a sleepy little sovereign wealth fund in 2015, and now it's not only a global player, but obviously in the domestic market, it's everywhere. I just find it I don't know if it's a unicorn, but I find it fascinating.
Well, yeah. So historically, it has always been more, or at least it played more of a developmental role in the local economy. It was also the holding entity for a lot of public entities that got privatized. So think of utilities, think of basically a lot of utilities and a lot of government functions before they became private enterprises and got switched over into companies. And I think with the recent bout of reforms that we're seeing, it was definitely instrumental to essentially mobilize a lot of the policies that are coming into fruition. So of course that triggered a restructuring of the entire organization as a whole to become a bit more commercially minded and operate really as a typical sovereign wealth fund that would invest reserves and basically excess capital for the future. Of course, there not only does it invest in international markets, but also it's been quite active in setting up companies in the local economy to fill in a lot of the gaps that the private sector hasn't really stepped up to essentially take on. So it's a mixture of, I would say, still a developmental organization at its core, and also a financial investor that wants to maximize the wealth that is available for the country for future generations to come.
It is interesting because it has the capability and the assets to essentially be choose a sector and decide to be a loss leader in order to develop that sector. Something
Exactly.
a private company cannot do and would not do, should not do. But I just it's really interesting. Yeah, this has been fascinating for me. Lucian, did I miss? I'm sure I missed a bunch.
Well, just if I could ask too, and I'm going to kind of go back to the first of Flat Six, because I'm super curious in. So first, you guys have collaborated with MISK for startup boot camps. Can you tell us a little bit about that? And I guess specifically, I'm interested in the sort of energy of these young entrepreneurs in these boot camps, which are relatively new in Saudi Arabia. Could you tell us a little bit about that collaboration and how that went and sort of that energy in there?
Absolutely. So as an organization, Flat6Labs, of course, the core function for us is operating these closed-end vehicles that invest in basically the countries that we're present in. But a big part of that, and as we mentioned, setting up these vehicles can be quite long-term in nature. So a lot of our locations that you see today, where we have our own investment arms, really came to light around 2017, 2018, despite us as an organization being in existence roughly 7 years before that, if not longer. But during that meantime, we were quite active in operating these programs because it's not only a source of revenue for us, but also it's a very efficient way for us to create a pipeline and also get more engaged with the local ecosystem before we actually come in and start putting capital to work. So much like other programs that we've done with IKEA and Qutuf back between 2013, 2017, the MISK program was essentially a continuation of that, where essentially it allowed us to kind of put our finger on the pulse of the Saudi ecosystem and get more familiar with what's happening on the ground. In Saudi Arabia, Flat6Labs really started back in 2013, operating essentially an accelerator program in collaboration with Qutuf, which is a non-for-profit organization, and really the country's first private startup accelerator at the time. And of course, the funding there came from IKEA and Arabian Cement. And that lasted for a good 4 years before Qutuf essentially couldn't continue supporting the program. Of course, that was done, again, in our capacity as an operator and a consultant, more so than an investor. And again, that was also a very different time in terms of foreign capital being able to access Saudi Arabia. So it wasn't even possible for an entity like Flat6Labs to put money to work around that time period. And of course, then we did the collaboration with MISK during 2019, where between October and December of 2019, we essentially trained 100 plus startup founders across Riyadh, Jeddah, Medina, Al Qasim, and on the eastern region, Al Khabar / Bahan. And I think that was really the inflection point where the folks back in Cairo really realized that, okay, there's a really great opportunity here to put money to work. And that's really when the plans for this current fund really saw the light of day, and we started working with it.
So on that and on sort of the funding, when the fund is closed, and this is sort of a broad stroke, your website says, you're looking for companies in the logistics, utilities, e-commerce, health sector located in Saudi. And then there are a bunch of points that sort of could be at any point, incorporated or not, idea, prototype users, paying users, angel pre-seed seed, like anywhere in that spectrum. So I'm wondering if there's a entrepreneur listening to this or watching this with a great idea, they want to join your accelerator and want to apply for your fund, which you can do on Flat6Labs, by the way.com. If they're doing that, how could they pitch themselves to you? What are you looking for? Are you looking for the entrepreneur, or are you looking for company by company? And tell us a little bit about what you guys are looking for.
We're definitely looking for the entrepreneur on the entrepreneurial team, so to speak. So we try to stay away from single founders. We typically like to see at least a couple of founders working on an idea together. And really the whole idea there is that things pivot and plans change. Even though something might look appealing to the founding team in terms of where they want to take this idea, oftentimes through our program and beyond, entrepreneurs kind of realize that, okay, there was a blind spot here that I was kind of missing, and this idea would actually work great in this sector as opposed to this sector when they started putting the idea together. And that's why we list a long list of sectors that we would look at. We really are sector agnostic. We don't have preferences, and we actually hold the belief that at the early stages, sector verticals are not deep enough really for most countries within our region to kind of operate with a sector focus, at least as far as accelerator programs and investment programs go. So that being said, we really do invest in the team as opposed to the idea itself. And that has yielded great results in some of our other locations. And I have no doubt that it will continue to yield results in Saudi Arabia and other areas that we operate in.
Eyad Albayouk, General Manager at Flat6Labs Saudi Arabia, an early stage and seed venture capital firm in the kingdom. Eyad, thank you so much. This was a great discussion. We really appreciate it. We hope to see you again soon.
Likewise, and I really appreciate you having me, guys, and hopefully we'll be able to do this again soon.